Hi, ladies and gentlemen, welcome back. This will be our third episode. We'll be talking about moving average. What is a moving average? As per the term, it is moving in terms of period to period, and average will be the average price of the day that we have selected. Let's say if we choose a 20 days moving average, it will move within a 20 days of period from time to time, an average of the 20 days prices. Listen again if you don't get what I'm trying to say. Okay, let's bring the indicator out. Moving average. Okay, there are three indicators here available. Basically, they are the same, just that you get to choose up to three, in this case, to put into your chart. You can change the setting from 20 days up to how many days you want. The default will be 20 days, 50 days, and 100 days. Some people will choose 200 days. Okay, in this case, for a longer period of time, we'll go for 200 in this case. And what are the usage of this moving average? Why do we need this moving average? Let's go to the longest period of moving average first. We'll look at 200 days. Okay, look at this 200 days moving average. Remember our first episode when we talk about trend? Moving average can serve as a trend setter, a trend indicator as well. If the price closes above the moving average, it shows a bullish market. If it's below, it's a bearish market. Simple. As you can see in this chart that I have selected sun power because we need a lot of power today. Here, isn't this an uptrend? As you can see, until it change over here to downtrend, it crossover. This is where the downtrend already halfway down the trend. Okay. So do we use 200 MA to look for a buy signal or a sell signal? Yes and no, because 200 days the range has been too long. Too many days has involved. If we are looking for a short-term trade and a medium-term trade, we don't use 200 days. 200 days is really meant for a long term. Usually we use it to look to see if this stock is in uptrend or downtrend. If we are looking for a trading opportunity, usually most of the time we'll be using a crossover. 20 days crossover 50 days. Okay, in this case it will be the red crossing the blue. Let's look for some example here. When there's a crossover happen, okay, you see that the price has already gone up, come down, and then settle down. And when the crossover happened again, here it happened multiple times. That's because the volume was not high at the beginning. Here would serve as another crossover that you can look at. Crossover, it goes up. Let's look at the bigger picture. Crossover, settle down, buy at the dip. Okay, buy at the dip. Look, based on our trend, and it goes up again. Any crossover? No. Basically, there's no opportunity if you're using moving average crossover as an indicator for your buying signal. Here it crossed down. Be careful. The trend has changed from here as the 20 days has crossed downwards below 50. Has been trading below 50. You can see the trend has changed. It will save your ass from the trouble. Downtrend, crossover, it's still in a downtrend, am I right? Yeah, it slightly goes up, but below 200 MA. Can you see that this 200 MA is now serving as a resistance? Okay, you can actually use moving average as a support and resistance in this case. So it comes down, blocked by 200 MA, still below, crossover again, downtrend or uptrend, still downtrend. When it comes back up, crossing 200 MA, this is where the interesting part comes in. Okay, it crossover, come back. Oh no, it crossed downwards. Became another downtrend. It shot down. Okay, look for crossover. Look for uptrend if you want to have an easy trade. If you have very high risk appetite, when it cross over, you can go in, but do take note that there will be risk, a lot of risk if you are trading in a downtrend. Can you see downtrend, downtrend, go up, downtrend? It's in the longer term, it's still a downtrend. Here, after so many months, it has turned into almost a sideway. Okay, and then when it cross over again, when it's turning into an uptrend, trading above 0.535, that's when we will look for our opportunity to get in. It has crossed over here once, twice. This one, the third times, this is where we can start looking for our opportunity. But do take note, in a basic support resistance, this will be a very strong resistance for it to break through. Once it breaks through, it has been confirmed that it has turned into an uptrend. That's when we look for opportunity. As I mentioned just now, we can use moving average as a support and resistance. Am I right? Okay, let's dig deep, bring it up and see. Let's look at an uptrend first. Okay, let's look at an uptrend, then we go to a downtrend. Here, moving average serving as a support or resistance. Here it will be a support. The price comes and touches the 20 days moving average and bounce off and continue to ride on the moving average. Okay, can you see here another one? It touches and touches before it goes up. Here, after a long run, a rally, it comes back to the 20 days. Touches, try to break below. Let's draw nicely. Touches and try below. Try to go up again and break below. It tested this moving average a few times before it start crossing over. When it cross over, remember, when it cross over, it's a change of trend. Crossover, go down. What is this? Lower high, lower low. What is this trend? Downtrend. Yes, correct. And this 50 days moving average is serving as a resistance. Be careful if you are trading at these places. Okay, come back down, go down and stay below the trend. As we mentioned before, do not trade, do not buy in a downtrend. It will make your life hard. You can do it, but why would you make your life hard when you can find other counters that can give you a better opportunity? Continues to go down, serving as resistance in this case. Go down, go down, go down. Yes, as a support. It has turned into a support here. But what are the trend? What is the trend that we are in? It's still in a downtrend. It tried to change higher. You can say it's forming a higher high, higher low. Yes, but where is our huge mothership resistance? 200 days moving average blocking. Always watch out for these traps that you're in. If you want an easy trading life, 200 days moving average will be the mothership of your support, mothership of your resistance. When you see and you have overcome by, don't go there. Get out. Watch first. Don't go out from your home. You will get caught. So are you clear about moving average, using moving average as a support and resistance, and how to use moving average to trade in a stock counter? Just by moving average, you can see the trend, you can look for a buying signal, and so on. So since this is the third episode, let me tell you a secret. The secret of CNX up strategy. CNX up strategy, basically we will use trend, stochastics, and moving average to generate the signal to you. Let's bring in stochastics. Okay, we'll try to zoom in to a certain period of time. Let's clear all of this off. Let's go for uptrend and downtrend. We'll look at uptrend in this case, combining trend, combining stochastic and moving average, and see how many opportunity that we have. Uptrend, okay, let's assume, okay, let's see here. Uptrend, confirm. 1, 2, 3, 4, higher high, higher low. Then we start looking for opportunity. Yes, you might miss out the first part, but that doesn't matter. It happens to all of us. Even an expert trader will try to wait for an opportunity like this, okay? Even though the boat has, you have missed the boat, it doesn't matter. Look for another opportunity. Okay, dip. Let's start from here. It goes up. Supported over here by our moving average. Then we use look at stochastic. Okay, oversold area crossover 1. Let's circle out all these crossover first. Okay, here crossover. Did our moving average crossover? It crossed down, right? It didn't cross up. So wait for it. Wait for the cross up on both of these indicators. Here cross up, here cross down. Contradict. Don't go in unless you just want to buy at the dip. If this is an uptrend dip, by all means go ahead. But for me, I want to be very, very safe. So I'll look for, what I'm looking for is crossover on moving average and also crossover in the stochastic. Is there any crossover in stochastic? Here we have one moving average crossover, and there you go. Basically here is oversold area. You can actually get in because we have crossed one time. Here the second opportunity for us to go in. The third one, here cross, here another cross. Buy at the dip. Okay, cross cross, you buy. And there you go. Okay, we sell off at the crossover here when it drops. That is a 71% just by one trade. You see how we are trying to preserve our capital and try to maximize our profit. Just look for that one opportunity in the market and it gives you the reward. Patience is a virtue. Yes, in trading, you need a lot of patience to look for this kind of opportunity. If you overtrade, that is when we lost some of our capital or all of our capital. It could happen if you are not careful. What about shorting opportunity? For those market that we can short, you can use this method as well. Once it cross over, look for the other high, look for the lower high, look for the crossover. Okay, if it stays below and never cross over the blue line again, you will continue and continue continue to go down all the way down the drain. Look for the crossover. You can sell, cross, sell, overbought, or sell some more, and cross again, sell, sell, sell. If it's a downtrend, the market is crashing, continue to sell. Here's the interesting part, which all of us would want to get in. When the market change the trend, when the bear market is turning into a bull market, that is our golden opportunity to get in the counter and to get in the market. So here is what I can share from this counter as an example on how to spot a change of trend from bear to bull. So when will a bear market change to bull market? I don't know. Seriously, I really don't know. By looking at the TA itself, as per what we have shared before on how to use moving average as our indicator for buying signal, when it crosses over, it shows a bullish sign. But when it's below 200 MA, that's there's a risk that there still be in a bearish sign. Okay, when it cross over, stay on top of 200 MA. Hey, seems like we're gonna have a bullish trend again. But when it cross over again and crossing downwards, you better cut loss quick. Okay, we don't know how much it will drop, as we cannot foresee into the future. We have no crystal ball to help us. If you enter over here and make a small profit of, let's say, 3%, yeah, you could have gained your profit of 18% initially, yes, but we are looking for a longer term in that case. Am I right? When you get in, you want to wait for a change of trend to maximize your profit, make the max out of it. But hey, it seems like it's coming back to test on that 200 MA. Then you better be careful. So when it crosses over, coming down, can you see here? When it crosses over, it could signify a bearish trend. So better cut loss quick and make a little bit of 2-3%. That's fine. Better than you making a 40% loss. Okay, understood? If you trade in a downtrend, trying to make profit from a change of trend, then you are exposed to a lot of risk, a lot of high risk trading over here. Okay, when you cross over again, okay, buy here. Okay, another risk that you comes in. Okay, let's say if you enter and market is giving you a good return, 30-40%, yeah, and you hold, wait until it breaks below 50% again, cut loss, you make a 27% and get out again. Wait for another opportunity. Tested on 200 MA, you can try to buy, but as I mentioned before, only look for 20 cross 50. 20 cross 50, here it happens again. Should I buy? Here you can, but don't put all your money. As we have mentioned before, when you trade, you don't one lump sum go in, you don't silang, okay? You only take up a portion of it and trade. Crossover. Did it enter oversold over here? Yes, there is a crossover. It could be an uptrend, but in fact, it went down. Cross below the 200 MA again. Now you could hold or you can cut loss. Here, an oversold area, and it start coming back again. Crossover happen, crossover happen. %30%, and when you try to cut loss, why can I not click? Why can't I click that? Okay, let's say you bought a crossover. Careful with 200 MA, so you waited for your opportunity and you buy above the 200 MA. Cut loss when it drops below 16%. I'm not talking about the full opportunity that you have. If let's say you bought at this area when it's oversold and crossover, Let's assume it's over here and cross MA as well. $30, $25, and the last one was, as mentioned, was 16%. Okay, when the crossover, come back to another downtrend. When it cross another time below, as we mentioned before, we are looking for a change of trend type of trading. Okay, so when the trade goes wrong, you cut loss or you take profit and you get out. You wait for another opportunity again. Try to get in. When you crossover, you enter. Overbought, another opportunity before it goes up to 16%. Okay, this time, did it cross 50? Yes, I would say it crossed a little, but it didn't close much below 50 like what it happened before, like for example here. When it crossed, it drops below. Before you cross over, it drops below. Before it cross over, it drops below. It did not. Okay, just make a dive, make a dip, and then start to rally again. As you can see from here, go back to your trend. Higher high, higher low, higher high, higher low. Is this what you're looking for? An uptrend and also a change of trend? Of course, in the past, it has been going up and down. It was not a smooth journey. It was trading in sideways, partially, and now it has turned into an uptrend. Let's see how much can we profit from this. I'm not asking you to be greedy, but it is always an option for you to trade in the market in this situation. First trade from here. Let's not be too greedy, okay? Let's go for 100%, then you take your profit and get out. Here, the first time, as mentioned, here is the second time. The third time, when it comes back and supported here, a lot of crossover and also a convergence, I would say convergence. Price goes down, this one goes up. Okay, then isn't that an opportunity for you as well? Let's count this as the third trade. Here, crossover, fourth trade. Crossover again, fifth trade. Crossover again, sixth trade. Okay, 6. Overbought area, momentum is high, continue to rally. Here would be a 7 trade, the dip, okay, 7 trade. You keep enter and you enter and you enter. How many trades could you have made throughout the whole year? It started from May all the way June, July, August, September, October, November, December 2021, crossing Chinese New Year, and then Ang Pao is there. Okay, when the crossover come down, hey, you have a lot of opportunity to get out before this crossover happen. Am I right? So don't be greedy, get your profit, take out, even though the last 2 trades might not be making you much money, but the first 4 trades would have easily made you 100%. Okay, then wait for another opportunity, which is the crossover. Overbought. If you are willing to use some of your profit to take the risk, that's when you can continue to hold or add on over here. Overbought area. Overbought, crossover, since it's above 200 MA anyway. Okay, 200 MA. opportunity comes in, a dip, you buy, dip, you buy. Okay, up until today, which is 15 June, another 20% just in one counter.